Welcome to the Trading Lounge and the Day Ahead Report. And here we're looking at the S&P 500 on the 4-hour chart. And as you know, we're looking for the A, the B, and the C wave down here. Now, the C wave is always in 5 waves. So I've got a feeling that the rally that we're seeing at the moment is just the 4th wave here. And we'll have a little 5th wave down here, which will take us into the next session here. So we could say that once the S&P 500 well, if I'm wrong and there is the 5-wave sequence within here, and it finds support on the 1500 here, tested support, then we could say that that's completed there at that point there. So if we just have a quick look inside that there, this is the CFD, the futures on a 5-minute chart here. So this low being through here, if we were looking at this this is just drifted in the off hours through here. So if we were looking at the cash, we could sort of eliminate a lot of this here and look at this as being the A wave to this point here. In 5 waves, and such as the 1, the 2, the 3, the 4, and the 5 to here, and then the B wave in 3 waves to here, and the C wave up through to here. And as the C wave's always in 5 waves, we'd be looking somewhere in the 1, the 2, the 3, the 4, and the 5 in here. So we should see it fail at the 1498, or I mean, technically, well, it can move higher than this here. So look, see it fail in here would be right, and then we'll be looking at 5 little waves down through to here, pretty much taking out the low of this low here, which will leave us at the sort of 1480. So it just depends on how this extends down. It could come into this sort of zone area here, and then push up from there. So there's just that little sort of wiggle before we know what's sort of going on there as such. On the sort of daily chart here, what we'd be looking, this is the S&P 500 again as well, we're looking for a 38.2 retracement level, which also brings us in at the 1480 there. So that's where we'd be looking for that. I do have a little bit of concern though in terms of how fast this move came down here as a C wave here, because as I mentioned before, normally the C wave is in a slower move and more of an angle than the actual A wave here. So, I guess we could also look at this, the 1500 here is the medium level, and it hasn't been rejected just yet. It is getting retested now, and we do have to allow that little 5-wave structure to come down here as well. But if we see, and the other thing too is normally the distance above a market, above a level a market goes, is normally the distance it drops below as well. So that's something that we could also take into consideration as well, which would bring us into the sort of 1470 sort of mark here. There's also the idea that the wave A here is the same length as the wave C here as well, which is extended now as well. So that's why this sharp move down here is a little bit of a concern, but we'll just sort of see it play out anyway, I guess. So that retest that's going on there now, if that fails, we'll be looking at a little 5 waves down here just to nip out the low there. So anything sort of past that, we really need to consider, well, the 1472 here, if that became the retested resistance, well, then we've got a bigger bear market on our hands. So we haven't seen the 1500 being rejected yet, and we just need to allow it time to, do its thing across this level. Everything's going according to plan. This is a bit of an overshoot pattern here, so that's why it can come back to the 1470 mark through here and move up from that point. When we look at the bonds market as well, which we've been looking at through here, where we're looking at this, well, once it broke the 144 here, then we've got to consider counting the waves to the upside here. So there does seem to be more room in this market to move to the upside here, because we've got up for 1 here, back for 2 here, and then in this move up through here is just the 3rd wave moving up here. So we've got up for 1 and back for 2 up for 3, back for 4, and up for 5 for the top of the third wave here. Then we'll have the fourth and the fifth. So this is really going to, this will be moving in line with the US dollar, and also placing pressure on all the other markets, currencies, stocks, and commodities as well. So there is more room for this to move up through here. So we need to be mindful of what's occurring here as well. And of course, this is the same for Europe as well. So when we're looking at the FTSE here, the FTSE here is the same as the S&P 500 and the A, B, and C here. So once again, too, if this is the little fourth wave pushing up through here, then we'll see a little fifth wave come down, taking the low of this one out here into this sort of area through here. If, however, it does find support on top of the 6,300, then we'll look at being long from that point there. The DAX has, just get the chart here, the DAX has got a bit more of a larger picture here in terms of to the downside here. If we're just squashing this up a little bit here, this is sort of considering this an A wave here and a B wave to here. I know it's a bit complicated, but a C wave would need to take the low of this one out through here. So when I'm considering this count here, this would be the 1, the 2, the 3, the 4, and the 5. So the DAX can come down further through here as well. As you know, we're kind of looking to being short from this point down to here. Cover at 76 here. If the 76 becomes the retested resistance, then take it down to the 75 at that point there as well. The German bonds are pushing to the upside as well, so that's obviously placing pressure on stock, and we can see that that's why we got this count here for the DAX to come down further, because the bonds are still moving to the upside. They've got a reasonable nice count to the upside, and that will also place pressure on the euro as well. So the Australian market is a bit of a mix between the UK and the US market, so it's pretty much the same sort of thing going on here as well in terms of the A, the B, and the C wave here. So this is obviously sticking to the 5,000 here. The only thing that I can sort of add to here is, really we need to allow the S&P 500 to move out to complete the C wave, so to speak. But normally with these markets, the Dow Jones and this market here, you can work to every 100 points. But when you're working across large numbers like this, it's better to reduce those 100 points down to 50, and you'll find the market will sort of vibrate at those support levels at like 49.50, 4,900, 50, 5,050, and so forth. So just work to 50 points, but also use the sub levels as well. I mean, it's just going to be dangerous around here. You're better off shorting the Australian dollar if you're in that, if you're looking at those markets as well. All right, let's have a look at commodities. Okay, just starting with gold here. We're still considering this a rally through here in terms of the A wave, the B wave, and up for the C wave, and as a wave 4, and a wave 4 would pull back 38.2% of the third wave, or to the wave 4 of 1 lesser degree. So that's this height here at 1618. So it's obviously moved up there sharply. So this is how we count it. So we just need to allow this to play out through here, and so at this stage here, this should roll back over into the 1600, retest lower ground here. Obviously, I know that looks quite strong through there as well, and it could be counted up for 1 and back for 2, up for 1, back for 2 into a third wave there, because it does have third wave personalities. But I think it's just important to allow it to play out at the 1600 here. In one way or another, it's going to spend more time within Group 1 here, the 10, the 20, and the 30. If we were wrong, then it would be finding support on the 1630, and if that was the case, then it would push to 1650 there. However, I just think we should allow it to run its course and play out, and pulling back to the wave 4 1 lesser degree is technically what it's supposed to do, I guess. So let's just allow that to play out there. And silver would be the same as well in its thing, a slightly different pattern here as well, but also the it hasn't quite pulled back to the fourth wave one lesser degree just here just yet. So, but it does have this corrective pattern here. So let's just allow this to play out through here. And if we're going to short it again, well then the 2900 here would have to become the retested resistance, and then we can use group 2 to build some positions into here as well. But I do acknowledge the strong move up through there, and it can develop support there. But let's just let it settle after that that announcement. It was probably from the Feds making their comments at 2 o'clock this morning. So the copper market here as well, we're getting our bounce off the 350 here. So the fourth wave of one lesser degree is this one here and this one here. This particular wave 4 here, the 38.2 retracement level, is just above the the 360 here. I think it was at 362. So we just need to be mindful of that as well. So a bounce back into this area through here, then wave 5 coming down. So we are getting what we expected to get. After the strong third wave here, we start getting these series of waves 4s and 5s to the downside. So, but there's still more to unwind here, because this is the beginning and the middle and the ending part here. So normally the ending is quite similar to the beginning of a trend, so it's just a bit tricky to trade wave 4s and 5s. And in Elliott terms, we don't normally trade wave 4s because they can get complicated as well. But what this does here as well, it will put support into BHP as well, or the material sector. I mean, when I talk about BHP, I talk about it's just being central to the material sector. So when we're looking at this is local BHP here in Australia here. So there's a couple of situations here. As you know, we're counting this up in two ways here. Counting it up in terms of a 5-wave structure and also an ABC structure. So the impulse wave, the 5-wave structure will be wave 1, wave 2 here, and then we've got our 5-wave structure for the third wave here. Yep. And then if that's going to be the third wave, then we'll be seeing an A and a B and a C coming back, and then another wave 5 moving up to the medium level here, 40. If it's just wave C here in a large rally, which it certainly can be, the A wave, the B wave, and then still 5 waves up for the C wave here. So that could certainly be a top as well, and this has moved down quite nicely. The A waves here, or wave 1 here, wave 2, and then wave 3 coming down here further. As a wave 4, it will pull back to the 38.2% of the length of the third wave here. So that's kind of what it's doing at the moment. So we're quite lucky here really, because we've got the 38.2 retracement level and the wave 4 of 1 lesser degree here at the same price here. So a little bit of a trend line coming through here. So we really just need to allow this to play out here. So yeah, look, sometimes the wave 4 in BHP is just really one straight line and can move straight up from that, but I think it's important to look at the more complicated picture here as such. So we'll look at something like this before we see any further upside. But the support on the 350 should see us getting support there on the copper market. Of course, BHP does oil and a lot of other things as well. So looking at the oil situation here. In the WT of the Western Texas here, we're looking at this being 1, 2, 3, 4, and 5 coming down through here. This little correction here seems to be in 3 waves here. So I don't think that's finished yet. I think that we could actually get another little move down into this area here, especially if the S&P 500 is doing that little 4th wave rally back to the 1500, and if that drops back down to the 1480 on the S&P 500 or the lower than the 1480, then we'll see this move down through here. So we're still searching for a low down through here. If we get support on the 93 here on top of that, that's actually group 1 here. So that means that we would be moving up from that point there, the $1, $2, and $3 there. If support was found on that, then we'd be moving back up to the 95 at that point there. So yeah, just give this a little bit of time here. You know, Woodside pulling back quite rapidly as well, so we just need this to play out through here. You know, normally if the 92 becomes the retested resistance, then we need to look at 90, and not only 90 but 88 at that point. So, but it will move with the S&P 500. Let's have a look at the FX. Okay, this is the US bonds here, and we can still see that there's still further to move up in the bonds here, and we've got our little sort of third wave in the middle here, which is for wave 3, the wave 4 and wave 5 for wave 3 here, then wave 4 here, then wave 5 here. So we've still got you know, a fair bit to go here before this rally, this larger A, B and C rally completes up here. So the US dollar will be doing the same, and the euro will be doing the same in the opposite direction. So when we're looking here in the US dollar here, we've had what we can expect here is we can expect the classic trading levels pattern, which is the arrival, the reaction, looking for support, the first high above the level, and then an A and a B and a C, or some type of correction here, and then another move up through there, and that would line up with the picture that I just talked about with the bonds. On the flip side of that, we'll see the euro to the downside. Now, the euro to the downside here will be doing the same thing as it's working through the 130 here, which will be a bit of a bumpy ride, so to speak. Now, this is a different count than you'll see on the chart, but it's an alternative count, and we need to we need to consider it because of the bonds and the euro there. So this can be expected to come down into this area through here. I just don't know how fast it's going to travel through here. The other side to this is of course the S&P 500 and the euro having some correlation as well, but they can be out of sync for a little while. But just watch that as well, and it means that we need to also be more mindful of that retest of 1500 on the S&P 500 too, and it moving down to the 1480 and 1472 sort of area through there as well. So you know, we've got that sort of bear in the air, so to speak, and we just need to be a bit diligent of what we're doing on the ground, so to speak. Right, the Australian dollar is doing its thing as well in terms of moving lower. We're looking at this yesterday around the 102.72 there, and it's put itself lower. So this is just following the bounce up in the S&P 500, which we feel is just that fourth wave there, and this is also moving with copper as well. There's a reasonable correlation between the copper market and this market as well, but we feel that rally in the copper is just that. It's a rally, and that will end shortly as well. So we should see this end here as well. So this bounce here so far is just probably in its first leg of an A and a B and a C wave through here before we see further downside. If you're looking to short this here, then the 102.20 is what you want as resistance, as retested resistance, getting a small position in here, and then looking to add under the 102 area through here. If it is going to move down further, then you need to look to add at the 101.72 here. Look to build the next position there. So 3 positions you can build in through there. One is the retested resistance on the 20, then on the 2 here, 102, and then on the 101.72 area through here, as this is expected to continue to the downside, and you can see the wave counts on the charts for those. Alrighty, well, that's it. In terms of just sort of recapping, in terms of our daily robo situation with our ASX stocks, and also the US and London as well, going through the same thing as well. That's why we're trading less. But first of all, we just got to work out if the retest to the 1500 on the S&P 500 is just a wave 4, and we'll go down to the 1472 there. So yeah, look, we just really need another day of caution there, and look, tomorrow, if it does push up and we find support on the 1500, well, then we'll go from long from there. If not, we'll look at going long from the 1472, 1480 area. So we just got another day of sort of chilling out a little bit, but the US markets are up, and Wednesday for us in the bullish weekly cycle is having a higher close on the Wednesday. It can be down on the open, but then up in the up following that, a V-shaped sort of day on an intraday basis. So a couple of things there to consider: that little wave 4 rally to the 1500, and how we're going to sort of move around that. But I suggest that we just wait until that completes, which should be tomorrow, and then we'll know. Then we've got a better idea of what's what from that point. Alrighty, well, good morning and good luck. Enjoy the day ahead.